but it looked like this. Does that make sense? Why? Stocks went down and fixed income went up. So the fund balance was less, the value of the fund was less, but the allocation was skewed. So what's the best thing to do here? Sell stocks because stocks are going down? No, rebalance. We sold fixed income and bought equities. All the way down the hill, actually. So when the thing started to go up, what did we have more of on March of '09 than we had in October? We had more shares of stocks. Not because we were market timing, not because we ever knew this was the date. It's because this went out of scope by more than 2%. And when it does, our policy statement says we rebalance, we buy stocks. And there were times all the way up the hill in '09 as the stock market was getting a 30% rate of return, and my clients were enjoying that with 10% more shares in their barn. We were selling those stocks and buying fixed income. And as Fox News really started to hit the fact that emerging markets were doing really well, everyone in the world wanted to buy emerging markets. By the time that the news picked up on it, they had plateaued, and we were selling. And the news gave us lots of buyers. And we were over 2% in our emerging markets. We sold them, got back to where we needed to be. It's just academic. We can't predict the future. We don't try to predict the future. We can engineer a fund, and we can keep it the way it ought to be, and then you can expect market rates of return, which some years are going to be negative. And it's how you act and how I act during those negative years that really gives us the right to collect the big return over the long period of time, the positive average return. But if we don't act accordingly, then we don't have the right to get those returns. But it is possible to get them. So that's my presentation. I'm going to end with 20 questions. So if you go back to the last page, flip it one more time. We coach to these 20 questions. These are 20 questions for your peace of mind as an investor. And they're my questions, so you can imagine we get to tailor them. But I believe if you can answer a 100% hearty yes to every one of these, that you'll have a great level of peace of mind. And clients who've been with me for 3 years or 4 years or soon 5 years will have the ability to say yes to each one of these. And the first question is, do you know your purpose for money? That which is more important than the money that you have. And if you can articulate that, then check yes. If not, check no. So go through and just check these. No one's going to watch. Have you discovered your true purpose for money? Question 2, are you invested in the market? The implication there is if you're not, you probably aren't going to have a great deal of peace of mind with respect to your investments because you're not going to keep up with inflation. So if you have a 401k with a mutual fund, you probably are. You can check yes or no. Do you know how markets work? Could you explain how markets work? I think an investor who's investing in the market ought to be able to explain it at least some cursory level. So if you can, mark yes. If you're not sure, mark no. Have you defined your investment philosophy? Essentially here is, do free markets work or do they not work? That's the philosophy. Have you defined that out? Do you know what that is? Question 5, have you identified your personal risk tolerance? It's a good place to start with investing. Question 6, do you know how to measure diversification in your portfolio? Question 7, do you consistently and predictably achieve market returns? Or do you have no idea? Question 8, have you measured the total amount of commissions and costs inside your portfolio? Again, what you don't see can hurt you. Question 9, do you know where you fall on the Markowitz efficient frontier? If you've never heard of Harry before, you'll have to say no to that one today, but that's okay. Question 10, when it comes to building your investment portfolio, could you tell someone exactly what you're doing and why you're doing it? I'll tell you, my clients, when we first start down this road of investing for them, they can't answer this question with a hearty yes. But after 3 or 4 years, they can. They come to a quarterly event 2-3 times a year. They read my blog or they watch some of the stuff. Everything I do on my blog and in events is for my clients. Clients take friends to it. That's great, but we're all... My focus is getting you to be able to answer yes to these 20 questions and know what you're doing. This is one of the most important ones. Because when you're in the middle of a 2009 and you don't know exactly what you did and why you did it, you're probably going to do something stupid. You know? I mean, if you own 6 mutual funds and you have no idea why you chose them in the first place, you're probably going to sell them. You're probably going to do something that doesn't make a lot of sense. But if you know exactly what you're doing, why you're doing it, we're rebalancing, it's purposeful, it might hurt, it might be a little painful, it might be hard to see 200 become 100, or 200 become 150, depending on your mix. But you know exactly what we're doing, why we're doing it, you're probably going to be there. You're probably going to hang out there and do the right thing. And our clients have their money back already. The Dow isn't, I think they're 15% off from where the Dow was to where it went down to where it went back up. But a diversified, rebalanced fund has all its money back again. So you can have that kind of comfort. Are you working with a coach or a planner? And a good way to answer yes to that is if you got yes to the first 10, you can probably say you're getting yes to this one as well. If not, you're probably working with a traditional planner. I got into this business a little reluctantly. It's because I determined financial planning, in essence, as we generally understand it, is broken. And coaching really is where it's at, helping clients understand what it is they're doing. We hear Dave Ramsey say this all the time, right? Don't invest in anything you really don't understand. And so I felt like we want to help people understand investing. And if we can, and give you peace of mind along the way and a good return, then we should do it. 12, you have a customized lifelong game plan that will gauge your spending and investing decisions. Question 13, do you have an investment policy statement? Question 14, have you devised a clear-cut method for measuring the success or failure of your portfolio? I'm catching up here, am I, Michael? There we go. Do you know if your manager or your portfolio is succeeding or failing? 15, do you fully understand the implications and applications of diversification in your portfolio? We all get this little picture, right? We get diversification, but how well do you understand that? Do you know why we were in Japan and why we didn't sell out 3 months ago when water started to overtake that entire country, but why we bought more there? And how exciting it is when other companies were selling out of Japan because they were freaked out. We were buying there. That helps these companies. Right? It helps these people, keeps them liquid, keeps their stock price from really just flat out hitting the floor. We reallocated into Japan because we have an emerging market sector, very small. The average portfolio maybe has 1% in Japan, but we kept it where it needed to be. 16, do you have a system to measure portfolio volatility? 17, are you aware of the incentives that brokerage firms and the financial community have when selling you commission-based products? 18, you can all answer yes to this one. Do you know the 3 warning signs that you're gambling and speculating with your money versus prudently investing? It's called track record investing, stock picking, and market timing. So you have that one nailed down. I can answer yes. 19, can you identify the cultural messages and personal mindsets about your money that destroy your peace of mind? How do advertisements of things you want, how do those sit with you? How does comparison of your friends and your current financial state sit with you? Are those kinds of things that you've wrestled with or dealt with? Are you maturing beyond some of those things? I know I've struggled with the comparison thing a lot of times. So-and-so has X and I don't, and therefore my contentedness is less. More money is not going to make us content, right? It's we've got to identify these things, we've got to call them for what they are, and try to eliminate those from our vocabulary and from our minds so that we don't sabotage our own peace of mind as well. And then 20, and this is one where I'd love for everyone to answer yes, and I'll tell you about the opportunity. Are you ready to shift your personal mindset about money and investing from one of scarcity and a lack of understanding to one of abundance and grasping it? You can score yourself on the last page. I was solidly a frustrated investor about 10 years ago when I took this quiz. So it's good to know where we're starting from. Next steps. For anyone who's looking for to know how some of this might apply to them, I offer a free phone call. It's a free coaching phone call. We call it the Investor Inventory, where this one you heard from me a lot, and you heard where I'm at. I'm going to hear a little bit more from you on a couple of levels. Your interaction with financial planning, understanding a little bit of your holdings and also your interaction with investments and what you get, what you don't get, where your gaps are, and whether or not I can help. And I think in a 45-minute phone call, we can put you at ease, or at least recognizing if we have a good fit. And so that's a good next step for many of you. If you want to take advantage of that, then just let me know and I'll have Liz call you, but then I want you to take one of these home. So if you're interested in having Liz call you to set that appointment, Carolyn, you guys have been through that. That's a process you've been through already. Carolyn's husband Peter has been through this. She wanted to hear it, but the rest of you, if you're interested in that, I'd love for you to take one of these, and then Liz will call and schedule a 45-minute phone call or a meeting here where I can go through that 45-minute coaching session. But that's what I have, so I'm glad you were here. Thanks for listening. Any questions that you have, I'd love to answer. And some of you may need to get going. I know it's 6:45, so.